Hello, everyone, and welcome to this latest episode of the Bull and the Bear podcast. I'm your host, Matt Clark with moneyandmarkets.com. But you're flying solo a little bit today, so that is not a problem. I think I can handle the ship. Make sure you tune in on Friday, where we will have Charles Sizemore, contributor, as well as Chief Investment Strategist Adam O'Dell. They will join me on the podcast as they do each and every Friday. Also, to let you know that you can listen to the Bull and the Bear podcast on Apple Podcasts, Google Podcasts, Spotify, iHeartRadio, and a slew of other podcast host providers. So whatever your podcast listening venue of choice is, leave us a review, leave us a comment, leave us a question. Love that kind of feedback. You can also email us directly at thebullandbear@moneyandmarkets.com. I'll put the email address down here at the bottom for you, but it's thebullandbear@moneyandmarkets.com. Now, to jump right in, over the last couple months, there's been at least one stock that has really grabbed the attention of investors, not so much in a buying way, but more in just a watch and see what it does kind of way. And of course, I'm talking about Tesla. The electric automaker has skyrocketed in the last couple of months. Of course, it saw a nice bounce at the end of the year, but even during this coronavirus pandemic, Tesla stock has just gone through the roof. And I'm looking over here at another screen, so it doesn't look like I'm looking off or anything, but I have some information that I'm kind of looking at. But just to kind of give you some context a little bit, it hit a recent low of about $361 a share back in March, as did just about every other stock on the market due to the coronavirus crash. But now its current price is above $1,600 a share. That's a jump of about 343% just in that short a time. So that is an impressive meteoric rise. That share price jump has really dominated financial news headlines. We've written about it at moneyandmarkets.com. But I think a big question that you have to have is, number one, how high is Tesla going to go? And then, of course, number two, that leads into, is this something I should invest in? And I want to get into that a little bit in terms of answering both of those questions as best as possible. It's got a market capitalization of $303 billion. It's, I believe, either the most or the second most valuable automaking company in the world, rather. And it just recently hit that benchmark not long ago. But one thing to keep in mind with a company like Tesla is, while you're seeing its stock price rise, you've got to look a little deeper than that. You've got to look a little deeper than just what a single chart shows you. So what I've done is I've kind of pulled up some of the different metrics and things like that we look at Money Markets using Adam O'Dell's proprietary stock rating system to kind of give us a bit of an indicator in terms of what Tesla has done and where it is going. But there's a few points I want to make sure that we're clear on when we talk about Tesla. Number one, I'm not saying it's a good or bad company. And I don't want anyone to misinterpret that I'm saying that Tesla is bad or Tesla is good. That's not it at all. What I'm basically doing is I'm just evaluating the company's performance and its potential as a stock buy or a stock sell or a stock hold or a stock stay away from, if you will. So realize that Tesla has not made an annual profit at all, ever. In its time, trading on the market, it has not produced an annual profit yet, which is a little bit telling in terms of the company's operation. Obviously, it doesn't reflect on the stock price because the stock keeps going up, even notwithstanding the fact that it hasn't made an annual profit. It may very well do it this year. They're on the verge. If their quarterly earnings come out here this week, and if they do report another rise, a positive revenue, they can be listed on the S&P 500, which is kind of a milestone. If you're Elon Musk and the company execs at Tesla, that's kind of a big deal. But it does have the market value that's equivalent to, I believe, a third of the combined U.S., EU, and Japanese auto indices combined, despite an expected share of only 0.8% of the global auto market this year. So basically, its market value is a third of the largest auto indices in the world, but its share in terms of how many vehicles it sells doesn't even amount to 1% of the entire auto market. And again, you read into that what you want. I'm not telling you that is good or that is bad. It's fact. Small investors have jumped on board with Tesla. And in fact, Robinhood, a very popular online trading platform, has said that the number of accounts that use Robinhood that are now holding shares of Tesla has doubled in a month. So if you have 100 people, if you have 100 accounts that own Tesla, that is now up to 200. That's a massive jump, and I'm pretty sure 100 is. I'm just using that as a reference. I'm pretty sure it's much higher than that. Evercore ISI, an investment bank, referenced Tesla as a tulip, which is an interesting kind of a reference when on a note it published on Tesla last week. One of the things about tulips is it kind of serves as a cautionary tale for investors, because if you remember, well, it's hard to remember, but a long time ago there was a huge tulip sale mania because just over the flower, and then and the price of tulips just exploded because of demand, and then subsequently it fell off a cliff. So in the second quarter of 2020, Tesla's delivered about 90,000 cars to customers, despite the coronavirus pandemic, and huge job losses in several areas that it markets very highly in. It's made progress in expanding its Shanghai, China market factory to serve the world's largest car market, which is China. And so, there's a lot of things that are working for it, but yet there's also a lot of headwinds that are working against it. Right now, there's really not a rational explanation as to why this stock has taken off so much, outside of just speculation. So that, how high can Tesla go? I think it can broach 1,700 per share. I think, and that's a short-term move. I think its momentum is showing that it is tracking up. It's got very solid trailing returns. In fact, its trailing returns rated better than 92% of the rest of the market, according to Adam's stock rating system. So that's those trailing returns are helping boost that stock price. Its risk-adjusted returns are rated at a 99. Which means only 1% of all other stocks have better risk-adjusted returns. So things that work in favor of Tesla are that right there. So I can see the momentum carrying it to 1,700, maybe a little higher than that. However, the other thing that you have to consider are other metrics that we look at when we evaluate a stock. One of those being value. The value is basically you are looking at various metrics in terms of the value of the stock. Is the value of the stock in line with not only the industry, but also in line with projections? And right now, the answer to that question is a pretty overwhelming no. I understand the market right now is very overvalued, but Tesla, on the other hand, expands that even more. Right now, its price to sales is at a 12. The industry average is less than 1. What's really telling is its price to cash flow. And this is what I say when I go back to saying that it doesn't really make a profit. It's never made a profit. Its price to cash flow ratio is 148. The industry average in the auto industry, 9. I mean, that's a massive variance. And that in and of itself would suggest an extreme overvalue position for Tesla. Its price to book value is a 35. The industry average is about 2. So you can see just in those metrics and looking at just the value alone, that Tesla it has probably reached a point to where there's going to have to be a pullback at some point, because it is extremely stretched in terms of its value. It's also a very big company, and that's something that rates that we use in our stock rating system with Money Markets and Adam O'Dell, is we look at the size of a company. And right now, the size rated at a 0.1. Which means it's a very big company. It's a huge company, and it's it does and that does speak to its market movement. There are a lot of concerns I have with Tesla. I mean, it's a very high price point. Let's not kid ourselves. It's a very high price point at $1,600 a share, a little more than $1,600 a share. That makes it a very expensive stock, and it's overvalued at that price. So that would lead one to suggest that at some point in time here in the near future, that stock is going to pull back. And if you've tracked Tesla at all, you know that it does have a tendency to do that. It does have a tendency to test a high and then significantly pull back and then start to build back up again. And where that second high is, no one knows. It's already had a pullback. It pulled back in March along with the rest of the market. It has not really pulled back since. So that would lead me to think that there is going to be a pullback coming for Tesla. I know that analysts have, priced this out to $2,400 a share, $2,500 a share, just massive valuations. But right now, the company's performance doesn't really justify that. And so that's why I have a bit of an issue in saying that Tesla is something you should buy. In fact, I would say just the opposite. Tesla is not a company that I would buy at this point, just because there are so many factors weighing against it. Will it hit $2,500 a share? It's entirely possible. And again, I want to be clear. I'm not suggesting that Tesla is a good or a bad company. That's not at all. This is not indicative of the company itself. I'm looking strictly at the company's performance in relative to its share price and where I think it's going to go. If you own Tesla, you can hold it. It's fine. I don't. It could go higher and provide a little bit more gain for you. But I think at the first indication you see a drop of 3, 4, 5, 6%, and one that's consistent, it's time to get out. If you're looking to buy Tesla, my recommendation is no. I just don't see that as a viable option right now. Is it one to buy down the road? It's hard to say. If it keeps going up, depending on this coming pullback that I see, if it pulls back significantly, it could provide a nice buying opportunity at a much lower price. If the pullback is smaller and then you see another reversal of the trend where it goes back up again, it's going to maintain that overvaluation and not be something that I would really get into. So, again, you've got a company that is in a good market, an electric car company, an electric car manufacturing market, which is something that is going to rise, and its pick and shovel plays around it. We talked about lithium ion batteries yesterday, and a company there that is showing some very strong growth. But lithium ion batteries expand well beyond the EV market, the electric vehicle market. So you've got companies that are surrounding the electric car, electric manufacturing, automotive manufacturing industry that are doing very well, but that's because they're segmented in other things that are not just directly related to electric vehicles. Whereas Tesla, it's very narrow focused, and I don't know that its inroads in China are going to pay off nearly as quickly as people might think. They are looking at another factory in Germany to help service European clients. Again, that's a market that's very tough to get into. It may very well, and I think you'll see maybe some nice sales initially, but there's a lot of competition in Europe for auto. And here in the U.S., the tax breaks are starting to rescind a bit, so it's not going to be as advantageous for people to go out and buy an electric vehicle, least of all one that's priced in the $50,000 to $70,000 range, as the average price of a Tesla is. So again, not a bad company. If you want to buy a Tesla vehicle, go for it. I don't see any reason. They're good cars. They maintain themselves fairly well. They've had some issues in the past, but I think a lot of those have been addressed. In terms of a stock, I'd say right now this is one that you want to stay away from. You don't really want to get too deep into Tesla right now, just because I think it's overvalued. I think there's going to be a pullback, and I think if you invest now, you're going to wind up losing in the end. That said, if it's a buy and hold play for you, it's a toss-up. It really kind of depends on your investment strategy and where you think things are going to go and how Tesla could possibly play in that overall investment strategy. So bottom line is, it's a good company. It's not a bad company. Think what you will of Elon Musk, its CEO. He could be a little quirky, could be a little off, whatever. That's neither here nor there. In terms of overall performance, though, I think Tesla is poised for a pullback, and I think it's going to happen here soon. And when it happens, you're going to want to make sure that you're probably not part of it, because you could wind up losing a good chunk of change depending on what your investment is. So that's kind of my take on Tesla. I've told you about how it ranks with Adam's system. It ranks high in terms of momentum. It's got good trailing returns. It's got good risk-adjusted returns. But really, in terms of its score, that's about it. Overall, if I didn't mention this before, Tesla scores a 49. Overall, taking all 6 metrics that we look at, it scores a 49, which means that there are 51% of all other stocks rated, all 6,000 stocks, 6,000 plus stocks that are rated, are actually rated better than Tesla. So take that into account. Make your decision based on what your investment strategy is and what your plan is in terms of Tesla. Again, not a bad company, just not one I would probably get into right now. That's going to wrap it up for this. I want to kind of keep it short today. I'm by myself. I don't want to, talk everyone's ear off. But I certainly do appreciate everyone who does tune into the podcast each and every week. You guys are greatly appreciated. Love to hear your feedback. We've had some nice feedback so far. And by all means, keep that coming. If you want to post on our YouTube channel, this is a video as well. You can do that. Go to youtube.com and just type in the Bull and the Bear podcast. And you'll find us, and you'll subscribe, and we're more than happy to respond to anyone we can. So do that. If you're listening to us on a podcast channel, leave us a review, leave us a comment. You can email us, thebullandbear@moneyandmarkets.com. Tune in on Friday. Money Markets contributor Charles Sizemore and our chief investment strategist Adam O'Dell, who I've mentioned before, will be back on Friday. We're going to find a couple stocks to talk about and give you our take on our thoughts, and look forward to that. So that's going to wrap it up for me. I'm Matt Clark, the host of the Bull and the Bear podcast. I'm certainly glad you've all joined us today. And make sure you check it out on moneymarkets.com. And we have a lot of other content on there that you can check out. Check out our YouTube channel, check out all of our podcasts, and we'd love to hear what you think. So drop us a line at thebullandbear@moneymarkets.com. So for that, I'm going to close it out here and hope everyone has a great rest of the week. We'll be back on Friday. And until then, safe trading.